Yeah. This is, for many a long year now, BHP has been very disciplined. It has been cost cutting and it has been rewarding shareholders with very big dividends. Now, maybe that's about to change, but certainly bidding eight and a half, $10 billion odd for Oz Minerals is a sign of intent. That I don't think there's any way they're going to get it for 25 bucks, to be honest, because Oz Minerals was 25 bucks back in June before that rout that we saw towards the end of June with tax loss selling and those fears of recession. So there's no way in the world BHP is going to get it over the line at 25 bucks. The board has rejected it, and of course that is their job, and they will have to talk it up. But you'd have to say that for BHP to be successful, they're going to have to pay north of 30, I would say. So there's plenty of gas in the tank there. Of course, they could walk away because it's a non-binding, highly conditional, etc. Bid, but it is cash. BHP, of course, plenty of cash. The interesting one, I guess, for Aussie investors, and this is my buy for the day, is Pilbara Minerals. Now, we have seen in the past, whatever BHP does, Rio tends to follow. Rio certainly stated its intent in its last results in terms of its lithium exposure. And you'd have to think that Pilbara at the moment, being in Rio and BHP's backyard, this is a company they would know relatively well. Rio got knocked back for their Jadar project in Serbia. They're still trying to consult with the community to get that one back on track, but that looks highly unlikely. They have got a project in Argentina with the Rincon project, and they're putting another $190 million investment into that. So they're certainly looking at new age metals, looking at lithium, and Pilbara is about the same size as Oz Minerals. And you'd have to think, given the elevated prices in lithium at the moment, they've also got a new CEO, and again, the stock has fallen from its highs. This may be a good time for Rio to pounce, if you like, and mirror or copy BHP's aggressive move. Also couple that with the fact that they were a little bit stingy, bearing in mind that Rio made $15 billion in EBITDA. An $8 or $10 billion takeover transaction is not exactly going to, it's hardly going to touch the sides in some respects. So it is a possibility. So that's certainly one that I've owned for a while and would be looking to add to on any kind of pullback. So I'm quite bullish still on Pilbara Minerals.
So are you expecting then some consolidation in the lithium market? Perhaps, are there any other companies you think that might be in play?
Well, I think there's going to be consolidation in the resource sector generally. There's a lot of very cashed up resource companies that have done very, very well from elevated commodity prices over the last couple of years. I know that commodities have come off a little bit to some extent, but these guys have raised money. They're in a good position. They've got projects on the horizon, and they have been quite frugal, building up their balance sheets, building up their cash balances. So I would not be surprised to see some takeovers especially in the gold sector. I think that's certainly ripe, and there are some media speculation today that De Grey is on the platter. Gold Road, of course, took over DGO, which had a 15% holding in De Grey, so they've already got a leg in. So, yes, I think what has actually surprised me is all these lithium companies, wannabes and producers, etc., have announced very impressive offtake agreements, very impressive funding packages, but there has been very little M&A. You would think that some of these emerging lithium companies would prove to be quite tasty morsels for someone to get into the lithium business. So I wouldn't be surprised to see some consolidation in the lithium sector. The near-term one is Core Lithium, which I own personally, only a very small holding now, but that's certainly, that's the next producer off the rank for Australia. So that's an interesting one. But I think, you look at Pilbara and you look at Liontown even, some of these emerging producers in the next couple of years may prove, good ground for the M&A business game.
Yep, all right. But you also mentioned the gold sector there. Of course, a lot of those stocks fairly depressed, given we saw that gold price come off. So, but your hold there is De Grey?
Well, I own De Grey. I bought De Grey around 75 cents, and they rallied back up to 95 cents. As I say, we do have a 15% shareholding in that one from Gold Road when it took over DGO. The other one that I like as well in the hold side of things is Dacian, which at the moment is under merger with Genesis Minerals, which is the new sort of great, well, I guess it's the evolution in some respects. Jake Kleiner Evolution was the textbook in how to build a big gold mining house. And Raleigh Finlayson at Genesis is certainly putting the band back together with its buy of Dacian. And there are others, St. Barbara as well, that could be on his dance card too, in building a very aggressive mining house, Genesis Minerals. So GMG, certainly one that I would be holding, but I hold it through Dacian, which is being taken over by it. So it gives you a slight discount to the current Genesis Minerals price. So both of those I like. De Grey I like as well in the gold sector. And I think we're going to see more consolidation and more takeover in that sector.
All right, and just let's wrap it up with your sell, Telstra.
Yeah.
And taking a look at the share price over the past 12 months, it's essentially just gone sideways. So what do you think? You're just sort of wasting your time there?
I don't think you're wasting your time, because I think it's been a good place to hide through all the turmoil that we saw in June or post-Easter, really. So I think it's been a good place to hide. I'm not bagging Telstra, because I think they have done a pretty good job. But if you're looking for ways to kind of, most investors only have a certain amount of money. They're not like institutions which have a massive sort of a cash pile sitting there. Most investors have to sell something to buy something to some extent. And if you're looking for something that is probably not going to offer the upside that some of the others offer at the moment, it's safe, it's dull, it's boring, it's domestically focused. Telstra has done a great job. Of course, we've got a new CEO coming in for Telstra. And as you rightly say, Andrew, it has gone sideways, which, considering the market has gone nothing but down and resources have gone nothing but down, to me it just offers an opportunity to take your money out of Telstra, to take your money out of some of the defensive things, and maybe dial up the risk a little bit in your portfolio if you're a retail investor, and look to get on some of the stuff that could be beneficial. You can always get back into Telstra at a later stage if the market looks like going to mush again. But given that number from the US on Friday, the market was very sanguine, really. Our SPY futures moved 7 points. The US markets were pretty much flat across the board, and that was a big number. So, maybe we are starting to discount the bad news, or whether it's even good news because of the number of jobs created. I don't know. But to me, Telstra is kind of not dead money, but you're not going to get maximum bang for your buck in Telstra, whereas you might do in the resource sector as it rebounds.